Hi everyone, today we'll be going over accounts May-June 2021, paper 2-3, question number 3. This is structured paper 2, which consists of questions of 90 marks, and it also has a time limit of 90 minutes. And since this is question number 3, which is of 15 marks, we will be attempting to solve this question under 15 minutes. So without any delay, let's get started. Jerry, Winston, and UPAR were in partnership, sharing profits and losses in the ratio 3:5:2. The partners decided to dissolve their partnership on 1st December 2020. On this date, the partnership statement of financial position were as follows. Then we're given additional information relating to how they sorted out their assets and liabilities, because this is a case of dissolution, which means that the partnership is being closed. So let's have a look at the question first. We need to prepare the realization account to show that the profit or loss made on the dissolution of the partnership. Alright, so whenever we're making realization account, we first record the assets at the given value of the statement of financial position on the debit side. So we have the assets premises with the value 97,000, furniture and equipment with the value 22,000, and inventory with the value 17,400. So let's record these three assets on the debit side first. The first one was premises, and it was valued at 97,000. The second one was furniture and equipment, and it was valued at 22,000. And the final one was inventory. So inventory had been valued at 17,400. Now on the credit side, we record how these assets had been disposed of. Maybe some partners took it, or maybe we sold it at a certain amount. So we need to record those amounts. Let's have a look at the additional information given. So Winston took over the equipment at the valuation of 7,200. Let's write that down on the credit side. So that will be relating to Winston. And he took equipment at the value 7,200. Let's have a look at the other information. Premises and furniture were sold for 61,100, and a check for this amount was received. So we can record this as the heading bank because check had been received. And since we're disposing of the assets, we will also be recording it on the credit side. Let's write that. So this is relating to premises and furniture. And we sold it at the value 61,100. Let's have a look at another information. Inventory was sold at a loss of 5,200. So we valued inventory previously at 17,400, and with a loss of 5,200, we sold it at the amount 12,200. So this will be the amount recorded on the credit side because this represents the amount that we received while disposing the inventory. Let's write that down. So we can also record it as bank because we received check for inventory. And we sold it at the value of 12,200. All right. Now we are given that trade payables were settled in full by check after deducting a 5% cash discount. So whatever we did for the assets, we do the same thing for our liabilities. But remember, we recorded the assets at the value in the statement of financial position on the debit side, but for liabilities, we'll do it exactly at the opposite side, meaning that we will record the trade payables at the value given in the statement of financial position, which is right here, 14,800. So we record this value on the credit side. Let's do that first. So that's going to be trade payables with the value 14,800. And on the additional information section, we were given that trade payables were settled in full by check, meaning that we paid it. So the heading is going to be bank after deducting a 5% cash discount. So we only paid 95% of the total trade payables. Let's write it down. So again, whenever we dispose the assets, we recorded those disposed amount on the credit side. But in case of liabilities, we'll do it exactly on the opposite side, meaning that we will record the payment of trade payables on the debit side. So that's going to be bank and trade payables. We paid the amount after 5% cash discount, which means that we only paid 95% of the trade payables. So that's just 14,800 into 95%, which can be written as 0.95. This gives the total paid trade payables amount to be 14,060. That will be recorded on the debit side. Alright, let's have a look again. The expenses of dissolution were paid by check, 2,140. So expenses of dissolution is always recorded on the debit side. Let's do that. Since the expenses were paid by check, we can record it under the heading bank. This relates to realization expenses. And the expenses amounted to 2,140. Alright, let's have a look at the other information. The amounts owed by or to the partners were settled by check. Okay, this does not relate to the realization account. Now, there are not any information. So we already recorded all of the assets and liabilities and how we disposed them. So we can just figure out the total for both sides, and then we can move on to figuring out whether there was a profit or loss made on the dissolution of partnership. So let's figure out the total for the debit section first. That's going to be 97,000 plus 22,000 plus 17,400 plus 14,060 plus 2,140, which gives the total to be 152,600. We repeat the same process for the credit side. That's going to be 7,200 plus 61,100 plus 12,200 plus 14,800, which gives the total to be 95,300. Clearly, we need to balance it on the credit side. And whenever we need to balance it on the credit side, that relates to loss made. So there is a loss on realization. And this loss needs to be divided among the partners. So that's Jerry, Winston, and Upar. So the total loss on realization can be figured out by finding the difference between these two amounts. So that's just going to be 152,600 minus 95,300, which gives the total loss to be 57,300. And now we need to divide this loss among the three partners on the basis of their profit and loss sharing ratio, which is 3:5:2. Let's figure this out first. For Cherry, that's just going to be 57,300 into 3 by 10, because 3 plus 5 plus 2, that's going to be 10. This gives the loss on realization for Cherry to be 17,190. For Winston, that's going to be 57,300 into 5 by 10. This gives the loss on realization for Winston to be 28,650. Now finally for Upar, that's going to be 57,300 into 2 by 10. This gives the loss on realization for Upar to be 11,460. Now we can just write down the total. Total is going to be the same for both the debit and credit side, which will be the balance on the heavier side, which you already figured out to be the debit side. That's just going to be 152,600, and the same for the credit side. Alright, this concludes the first part. Let's move on to the second one. We need to prepare the capital accounts of the partners recording the dissolution and final settlement of the amounts owed to or by each partner. So we already know that the final settlement are to be made via check. So we can record it as bank. And firstly, we need to record the opening balance on the capital accounts. Opening balance on the capital accounts are always recorded on the credit side, and we're given the capital balance on the statement of financial position right here. So capital accounts is given right here. For Cherry, that's 18,300. For Winston, that's 54,900. And for Upar, that's 26,700. Let's record these three amounts on the credit side on the capital accounts. Alright, we can just write it down as balance BD, which is the opening balance. For Cherry, that was 18,300. For Winston, there was 54,900. And for Upar, that was 26,700. Alright, since we're talking about dissolution, we also need to address the current account balances. So current account balances, we need to add or subtract from the capital account balances. Current account is given right here. So this one is given in a bracket. which means that the amount on the capital account balance of for Cherry is to be reduced by 5,740. So if we have the capital account balance on the credit side and it needs to be reduced, then the reduction amount should be recorded on the debit side. So let's record this amount of 5,740 on the debit side under the heading of current account for Cherry. So we can write it down, current account, and it had the balance 5,740. Now for Winston and UPAR, the current account balance is given without a bracket, so that's a positive, which means that the capital account balances will be increased by these amounts for Winston and UPAR. For Winston, that's going to be 2,290. For UPAR, that's going to be 820. So these amounts must be recorded on the credit side in the capital account under the heading of current account. So let's do that. There's no balance for Cherry. For Winston, that's 2,290. For UPAR, that's 820. Let's move back again. We can see that there is a loan from UPAR. So loan was taken by the partnership from UPAR, which means that this loan needs to be repaid. So whenever we repay something, this amount of 18,000 will increase the total balance on the capital account for UPAR. And the increment in capital account balances are always recorded on the credit side. So let's write this amount down under the heading of loan. So we have loan only for UPAR, which amounts to 18,000. Now, let's have a look at the first part. We figured out that there was a loss in realization. Loss always reduces the balance on capital account, which means that these losses must be recorded on the debit side of the capital account. For Cherry, that's 17,190. For Winston, that's 28,650. For UPAR, that's 11,460. Let's record those amounts. So we can write the heading to be loss in realization. All right, for Cherry, there was 17,190. For Winston, there was 28,650. For UPAR, that was 11,460. Again, let's have a look at the realization account. We know that the equipment was taken by Winston amounting to 7,200, and obviously he needs to pay this amount to the partnership, right? And while paying this amount, it will reduce the capital account balance for Winston. So reduction in capital account balances are always recorded on the debit side. So let's record this under the heading of equipment. So this is only for Winston, and he took the equipment at the balance 7,200. All right, this concludes all of the transactions that should have been recorded on the capital account. So now in order to figure out whether these partners owed any amount to the partnership or the partnership owed any amount to these partners, we need to figure out the total for all of these 6 columns. So firstly, let's figure out the total for this column. That's going to be 5,740 plus 17,190, which gives the total to be 22,930. For the second column, that's going to be 28,650 plus 7,200, which gives the total to be 35,850. For the third column, the total is going to be 11,460. For the fourth one, it's just going to be 18,300. For fifth one, that's going to be 54,900 plus 2,290, which gives the total to be 57,190. And for the sixth one, the total is going to be 26,700 plus 820 plus 18,000, which gives the total to be 45,520. All right. Now we need to figure out the heavier side for Cherry. The debit side amounts to 22,930 and the credit side amounts to 18,300. So the heavier side will be the total balance. So let's just write that down first. 22,930, 22,930. So we need a balancing figure right here, which means that we can record it as bank, and this denotes the amount that Cherry owes to the partnership. In order to figure this balancing amount, we can just subtract the total for this column from the total recorded right here. So that's just going to be 22,930 minus 18,300, which gives the balance on bank to be 4,630. Now let's look for Winston's. The debit balance is 35,850 and the credit balance is 57,190. So we must record the heavier side balances as the total balance. That's going to be 57,190 and 57,190, which means that we need a balancing figure on the debit side. We can record it as bank, and this denotes the amount owed to Winston by the partnership. In order to figure out this balancing figure, we can just subtract the total for this column, which is given right here, from the total. So that's just going to be 57,190 minus 35,850, which gives the balance on bank to be 21,340. Let's repeat the same process for UPAR. The total on debit side is 11,460. The total on credit side is 45,520. We record the heavier side balances as the total balance. So that's 45,520 and then 45,520 again. Again, the balancing figure must be recorded on the debit side. So there are no balances over here. In order to figure out this balancing figure, we just subtract the amount of 11,460 from 45,520, which gives the balance to be 34,060. This concludes the second part relating to capital accounts. Let's move on to the third one. We're given an additional information stating that the partners had decided to dissolve their partnership because of disagreements on important decisions. Now we need to state 3 other reasons why a partnership might be dissolved. So the very first reason is that the partnership is making a loss because no one wants to run a business which is making a loss. Let's write that down. Partnership is making a loss. The second reason would be retirement of a partner. If one partner wishes to withdraw from the partnership, then other partners might do the same as well. So that could be a reason. Retirement of a partner. The next one could be death of a partner. So if there is a partnership of 2 people and one of those partners dies, then the other partner has to dissolve the partnership. So that would be another reason. Death of a partner. Alright, this concludes the third part as well as this question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you subscribe to the channel and hit the bell icon so you do not miss any of these videos in the future. Thank you.